Okay, so most people hear debits and credits in accounting terms and immediately think that accounting is complicated. But honestly, the actual idea behind it is really simple. Everything in accounting works using something called double entry bookkeeping. And all that means is that every transaction affects at least two accounts. Nothing appears from nowhere, and nothing disappears randomly. If money comes into one place, it must have come from somewhere else. So how about we look at a basic example? So imagine you start the business and put £1,000 of your own money into the bank account. Two things happen here. So first, the business bank account is increased by £1,000. Then second, the owner's capital also increased by £1,000 because the business now owes that value back to the owner. So in a way, you could think of capital as a liability towards the business because they owe it back to the owner. So because of double entry, we need to record two entries. This is where the debits and credits come in. A debit is an entry on the left side of an account, and a credit is an entry on the right side of the account. If you're from the UK, think of it like this. Debit is usually shortened to DR, and credit is usually shortened to CR. So think of a drive on the left, crash on the right. One thing that I don't want you to get trapped into is thinking that debits are good and credits are bad. This is completely false. But there is a simple way to remember this, and it's called dead click. So this will tell you what goes where pretty much. So dead click is an abbreviation. It is D for debit, A for asset, E for expense, and D for drawings. So that spells dead. This means that the debit side consists of assets, expenses, and drawings. Now for click, spelled C-L-I-C, it's the same. C for credit, L for liabilities, I for income, and C for capital. So whenever there's an increase in these factors, we use dead click to figure out if it's a debit or a credit. If it's a decrease, then it'll be the opposite. So in our example, bank account increases, debit bank 1,000, because it's an asset, it's cash. But then also capital increases, so you would credit capital, which is credit because we think of dead click. So we credit capital 1,000, and then both sides will balance perfectly because you got 1,000 on the debit side and 1,000 on the credit side. That's why it's called double entry bookkeeping. So every debit needs a matching credit. So let's do another example. The business buys a laptop for £500 using the bank account. What happened? Well, the business gained a laptop, but the bank has gone down in its balance. So you would debit equipment 500 because it's an increased asset, and then credit bank 500 because it's a decreased asset because you're losing cash but you're gaining the asset, which is the laptop. So again, there's two entries. But how about we do a sales example? Sales being an income. So the business makes a sale of £200 in cash. So cash increases, so you would debit cash £200. But then the sales revenue increases, so you credit sales 200. So where you're debiting cash, you're increasing it due to it being an asset. But with the sales revenue increasing, you're crediting that because that is an income. So remember in click, the I stands for income. So every single transaction follows this pattern. And once you understand that every transaction affects two accounts, accounting starts to make more sense. A good way to think about it is, where did the value go? Or where did it come from? That mindset helps beginners quite a lot. Now, one thing that confuses people is the bank use words differently. Your bank statement might show money coming in as a credit, but in accounting, we're looking at it from the business perspective using accounting rules, so don't let that throw you off. But the main thing to remember is, double entry bookkeeping keeps the accounting equation balanced. As I mentioned in the previous video, assets always equal capital plus liabilities. I think I worded it the other way, but it still equals the same thing because previously we were talking about capital. So capital equals assets minus liabilities. But in the sense of assets, capital plus liabilities equals assets. And debits must always equal credits, as then they go to the trial balance. But I might make another video on that. Once you understand that, you've basically unlocked the foundations of accounting. It's all balance, and that's it. This is a slightly longer video than I hoped, but I hope you guys enjoyed it anyway. So that's all from me. Bye bye.